Alpha 7 Trading Academy. Welcome to your evolution. We believe that traders can be constructed and built with the proper training and guidance. On your part, your desire, your hunger needs to be channeled properly through commitment and effort. We've designed a very unique 4-level training course that will ensure your trader training is thorough and comprehensive. We're going to cover the vital aspects of day trading the equities markets in full depth, from the very basics to the more advanced strategies and methods. Now, the rate of improvement, that's specific to each individual's traits. You just need to focus on your own progress. In this course, we concentrate on the mechanics and structure of the methods and the effective application, oftentimes through an unconventional approach. Now, I want to talk about what not to do. Too many traders start here with the basics, with the fundamentals, and inevitably they put the cart in front of the horse, trying to speed the learning curve, and they end up here. And when you go from the ground floor to the rooftop prematurely, you end up here. There are no shortcuts in this market. This course is going to speed up your learning curve, but you cannot rush your progress. See, the markets are always going to try to exploit your weaknesses, and one of those weaknesses is impatience, to try to speed things up artificially. Evolution has to be nurtured gradually. The learning curve can be sped up, but it can't be rushed. So when I say pace yourself, that means if you don't understand the concept that we go over, stop, rewind, and start over again. Don't shortchange yourself. My name is J.U. I've been trading and involved with the markets for almost 2 decades. I've trained thousands of traders, investors, money managers worldwide. I've been around since the 90s with the SOS bandits, to the internet bubble in 2000, decimalization, real estate, bubble, boom, bust, financial markets, HFTs, algorithm programs. I've been pretty much on the cutting edge, at the pulse, on an atomic level, every single day for the past 20 years. I've been featured in USA Today, CNBC, MSNBC, Bloomberg, Financial Times, Active Trader, Traders Magazine, USA Today. Online Investor Magazine labeled me an enigmatic online stock prophet. I was voted Forbes Best of the Web 4 consecutive years in a row. And my books have been published worldwide through McGraw-Hill, Traders Library, John Wiley, Borsen Buschverig out of Germany, and my latest work, Way of the Trade, from Bloomberg Press. Alpha 7 has granted me the freedom to design a comprehensive, cutting-edge trader training program that's going to cover not only just the basics, but the advanced levels as well, from a lateral thinking, interactive channel. And I thank them for that. Now, let's go back to what I mentioned about lateral versus literal thinking, okay? Because this is one of the core concepts with the markets. Literal thinking is basically transparent, it's obvious, It's surface level, and you take it on face value. For example, how do you take 1 from 20 and get 19? Show me the equation. Well, let's see. 20 minus 1 equals 19. That's literal. Okay? That's full transparency. Can't be disputed. Lateral thinking means, well, you would be posed with the question, now, how do you take 1 from 19 and get 20? Well, from a literal approach, 19 minus 1 is 18. So how do you get 20? Now you really have to think. You have to dig in depth. And if you really think about it, or you don't, or you've heard this riddle before, right? You would actually change your perception and interpretation. You got to think outside the box. All right, maybe we're not talking about 19 minus 20, but maybe we change it to Roman numerals. 19 minus 1. Take 1 from 19, which is, well, this symbol right here, and you get 20. Bam. That's how you take 1 from 19 and get 20. That's lateral thinking. Lateral thinking works to attain transparency, but you can't take the normal route. You have to think outside the box. You got to take an alternative route. And the markets are all about transparency. Everyone wants transparency. The reality is that the market's job is to hide that transparency. And by the time it becomes too transparent, well, the opportunities are gone to make a profit. When it comes to your trader training, there's 4 stages. And that trader training, we can pretty much call it evolution. And throughout this whole program, you're going to run into parallels that go beyond trading, all right, to life in and of itself. Evolution obviously doesn't just apply to trading. It applies to every aspect of life. And what's ironic is that the evolution that you make as a trader, you're going to be able to identify that with a lot of aspects in life itself. Okay? So let's break that down. There's 4 stages in the process of evolution. The first stage is the acclimation stage. That's when you learn. You learn the basics. You learn the components, the Lego blocks that ultimately you're going to put together and build something. But acclimation is the first stage of the process. And during this stage, it's already understood that you're new to this. And this is something that you have to slowly embrace, let things sink in. You can't rush that stage. Acclimation, you're acclimating. Just like when you jump into a pool, a swimming pool, all right? Your body has to acclimate to the water. And that's the same thing with evolution. You're acclimating. And it is a natural process. Don't rush it. And this is the parallel. This is the metaphor for what an acclimation process, the acclimation stage, looks like. Now, when you are aware that the acclimation stage is where you're learning about the basic building blocks, like a child, like a toddler. This is new to you. You're learning the mechanics of cause and effect. You're learning the structure. And you're just familiarizing yourself with the synergies and the processes. Take your time during this stage. Let things sink in. Let osmosis sink in. And once you make your way through that acclimation stage, and as you get a grasp of the concepts, you're going to enter the conditioning stage. Now in this stage, you take that knowledge that you attained and you now try to fit the square peg into a square hole. Now you may take that square peg and try to fit it into a triangle hole or a circular hole. But you're going to find out firsthand, hey, that doesn't fit. So during this conditioning stage, you're taking that knowledge and you're applying that to discover what is the most effective way to apply that knowledge. You're going to learn to adapt. You're going to fail. You're going to fall many times. Okay, but as long as that conditioning stage is controlled and you don't fall, you don't have too far to fall, okay, that stage is used for conditioning to get a feel for the boundaries, to get a feel for what that cause and effect, what is the process, what happens when this happens, this triggers, this happens, the process, and you learn that organically. And then once you realize and you learn, hey, this sequence works, this sequence works, this sequence doesn't work, this sequence fails after the third step. And when you discover what works, and it's at that point, because you don't have too far to fall, it's at that point where you start to put together the templates, the proper templates. And once those templates are embedded, you continue to repeat those templates, continue to repeat those templates, so that you foster consistency, so that you get comfortable with them. Familiarity, you get familiar. And the more familiar that you get, you harness this thing called intuition. These first two stages are the most important stages. The acclimation stage and the conditioning stage. Now, as you take that conditioning further and further and further, as your comfort level and your threshold levels expand, you're going to enter this stage called the seasoning stage. And at this point, you're very aware of the natural cause and effect. The nominal is the key word here. The nominal reactions. The seasoning stage has you so prepared through repetition, that now you're acutely aware when anomalies happen. You're acutely aware when a divergence happens. In other words, you become seasoned. Just like a boxer, a champion in the ring, like a Bernard Hopkins. After enough time in the ring, enough opponents, enough experience, he realizes all he's got to do is move his shoulder a few degrees to the left, and he's going to offset 90% of the impact of a punch. That comes with experience. And as you gain more experience, you want to focus on optimization and efficiency. The energy that you expend to produce an outcome, you're going to find out that, wait a minute, you know what? I'm wasting a lot of focus. I'm wasting a lot of energy. And there are ways that I can optimize this. The 30 minutes I may spend on a strategy where only 8 minutes of that is actually used, you're going to find ways to optimize that. And that's all part of evolution. Because ultimately, when you get into that seasoning stage and you just continue to push and strive for optimization, for efficiency, you're naturally going to flow to the fourth stage, which is specialization. At this point, you have laser beam precision. Now it's about fine-tuning. You know this strategy or this stock. You know it like the back of your hand. And you've seen how it reacts in a whole panoramic multitude of situations. You're comfortable with it. You've experienced how it reacts in a momentum situation, in a reversion situation, in an anomaly situation, an outlier situation, like an earnings report, gap up or gap down. And you basically have experienced all the behaviors. And by specializing, you augment your skill sets to adapt towards that particular stock or that particular strategy or that particular rhythm. It's a beautiful thing. This is what evolution is. And the most important stages are going to be those first two stages of acclimation and conditioning. And the problem with most traders is that they start with the acclimation stage and they immediately rush to the seasoning and the specialization stage, where they don't deserve to be there. And the market will find that out. Understand, evolution breeds evolution. When you experience the first two stages of evolution at your own pace, you're going to understand. You are going to get enlightenment. And this process is going to suddenly branch out to other stages of not just life, but with your trading. And you're going to realize that, hey, evolution manifests evolution. As long as you nurture carefully those first two stages, acclimation and conditioning. And as the evolution continues through the stages, an interesting thing happens. The process speeds up. It's like muscle memory. You experience evolution to the stage 4. Guess what? You're going to experience that evolution even faster and faster. Because the nature of evolution is continue to improve the process, to optimize itself. And that is what you're going to experience: optimization, enlightenment. And the most important thing, as I said, is to make sure that you do not prematurely rush yourself through this evolutionary process. Skill sets can be learned. The integration of those skill sets, the application, that may vary based on your past experience in life, okay, which make up your traits as a trader. But let me tell you something. Traits, they can be conditioned. because traits react based on stimuli. And anything that reacts based on stimuli means the context, the background, the environment has an effect. And if you can control, if you can be a gateway for that stimuli, then you can control and condition a trait. So traits, we are all born with a certain magnitude, certain caliber of certain traits. But guess what? They can be conditioned. They can be controlled. And based on those traits, your progress is going to alter from other people. But you must understand that you need to focus on your own evolution, not others. Do not get into the habit of comparing yourself to others. And this goes right to almost a molecular level, because as traders and not mutual funds, portfolio managers, or hedge fund managers, you don't have to expose yourself to comparing your performance to the benchmark indexes. See, the beauty about prop trading is that you are in complete control of your exposure. And when you take exposure, and when you decide that you're not going to take exposure, you're in absolute complete control of that. And that's something that you must absolutely remember. Now, at this point, I want to go over some concepts that are very common in the markets. All financial markets. There's a concept known as correlation. And what correlation is, it's a mirror effect. If you take A and B, correlation simply means that A and B are identical. They mirror each other. And as it pertains to the markets, correlation means that most of the times they move together. It's a mirror effect. So in this example, spot the correlations. I simply want you to look at 1, 2, and 3 and spot the two options that are correlated. Remember, correlation means they mirror each other. They are, for the most part, identical. And we have two components: the right arrow and the left arrow. Now, if you guessed 1 and 3 for the correlations, you're right. If you guessed 2, you're wrong. So we'll go back. How are they correlated? Well, count the arrows. 1, 2, 3, 4 arrows to the right. Actually, 5 arrows to the right. 1, 2 left arrows to the left. And then 1, 2, 3, 4. 4 arrows to the right. So 5, 2, 4 is the sequence. Well, obviously we don't have 5 from the get-go right here. We go down to 3 and we realize 1, 2, 3, 4, 5. And then we have the left arrow. But we have a right arrow just as well. Okay. However, the definition of correlation means that we have the majority of the arrows pretty much point in the same direction and pretty much are aligned. So between 2 and 3, 3 is more correlated with 1. 2 is just pretty much doing its own thing. 2 right arrows, 2 left arrows, 2 right arrows, a left arrow, 3 right arrows, blah blah blah. So based on the sample of 3 choices, we realize that 1 and 3 are correlated. And sure enough, 1 and 3 are the ones that are most correlated, meaning that they mirror each other for the most part. Convergence is very similar to correlation. However, with convergence, you don't necessarily have components that correlate with each other the majority of the time. Convergence is a situation where the components at one point will all of a sudden boom, 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 boom. Like 4 right arrows. Boom, 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 boom. Now they're correlated. I'm sorry, now they're converged. They align and they move in the same direction, usually for a limited duration of time. So between these 2 options, when we see 4 right arrows, that's naturally convergence. When we see a right, a left, a right, and a left, okay, that's not convergence. So with that, we go to the next equation, situation. Spot the convergence sequence. Now, when we go through each option, okay, we have a whole ocean of options here. But we're going to cheat a little bit and go back. What do we have in common? If you break it down to just the 2 components, a left arrow and a right arrow, well, what we have here is 4 right arrows. 1, 2, 3, 4. So with that understanding, the correlation, in essence, is 4 right arrows. So now, with that, we go through and we realize for choice A, right, well, there's 3 left arrows, but there's no 4 right arrow situation. For option B, we realize, hey, we have 3 right arrows, okay, but there's no 4 arrow situation. Option C, nothing. B is the options. Okay. So when we go back, wow, did you guys catch that? Okay, so when we look at the options here, we understand that we're looking for a 4 right arrow sequence, convergence sequence. So now with that understanding, we go through option A, 1, 2, 3. The most we get is 3 right arrows. We go to option B, 1, 2, 3, 4. Well, what do you know? 4 right arrows. Let's go to option C. Do we have any right arrows 4 in a row? A sequence? No. Option D, 4 right in a row? No. So our answer should be B, 1, 2, 3, 4. A convergence sequence. And sure enough, there's the answer. Now, if you're able to take that very simple exercise, it's almost like a game of concentration. All you're trying to do is match the sequence. When you understand what convergence is, well, the opposite of convergence is simply divergence. So with those 2 options, this is convergence. What divergence is where you have a collision. Opposites. Boom. Divergence, the root word is diverge. And diverge means to deviate, to move in an opposite direction. It's the opposite of mirroring something. Now you are confronting something and it's going in the opposite direction for a limited duration of time. Just as convergence is for a limited duration of time. So with divergence, what we're looking for is the opposite of this. Now, the opposite of that is basically 2 arrows to the right, 2 arrows to the left. That's divergence. And as long as we understand, hey, this is what a divergence looks like, because it starts off as a convergence, but we don't get 4 arrows to the right. We get a divergence. With that understanding, let's take a look at this question. Spot the divergence. So now, let's go to the first option. 1, 2, 3, 4, 5, all in the same direction. Actually, 6, 7, 8, 9. Oh, okay, they're all going in the same direction. Wow, that's called correlation or convergence, depending on whether we're talking about indicators or price action. Option 2, we have 3 go to the right, 2 go to the left, and 4 go to the right. So the difference between 2 and 3 is basically these two. They're going the wrong way. Option 3, they're all going to the right. So this is convergence. This is divergence. If it weren't for these 2 arrows pointing to the left, they would all be correlated. They would all have convergence. And as it turns out, the answer is number 2. These 2 decide to go against the grain. So that's what divergence is. So, just to review, correlation is very similar to convergence. But correlation is based on instruments that normally move together. And then every once in a while, they'll move apart, but they usually come back together. That's correlation. Correlation, and then divergence, and then back to correlation. Convergence means that the components, most of the time, they're not really connected. So while one goes up, one may go down, sideways, up, down, sideways, and you don't usually have that mirroring effect. But when they do, all of a sudden move in that same direction, and they're aligned in the same direction with the same purpose, that's where you get the convergence. And divergence applies to both of those situations, where you simply have components that move against the grain. So now let's take that concept of convergence and divergence, and instead of using right arrows and left arrows, let's change that to red and green candles. Now these are actually called candles. Some of you may be familiar with candlesticks. Some of you may not. For now, it doesn't even matter. Just know that red and green. Okay? So basically you have 2 patterns, and all we're looking for is to connect and spot periods where the first component and the second component are moving together. They're converged. Versus a period where the first component or chart and the second chart are actually moving either opposite or they're just not moving together. And when I say moving together, I mean, if it's red up top, it should be red below. If it's red up top, it should be red below. If it's green up top, it should be green below. So let's take a look at this. Convergence means what's red up here should be identically red down here. Divergence means if whatever's green up here should be red down here. It's as simple as that. So when we look carefully, all right, well, we got some convergence here, red, 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 red. We have green, green here. But we also have red, red down here. So they're not converged. They're diverging from each other. See how that works? And we get a green, green, they're converged. Red, red, converged. Red, green, well, green, green. Not so much converged. So you understand what I'm saying. You take one, and then you match it up against the other. And then you will see where there are periods where there's convergence, and then periods where there's divergence. Now, if we applied some arrows, labels, where the white represents convergence, and the blue represents divergence, now we have a visual here where we see that, all right, in the beginning we have convergence. Ironically, we see divergence here where you have green candles versus red candles to an extent. And then we have convergence again. The yellow arrows are convergence. The white arrows are convergence. And then divergence. You get a whole series of green candles up, whereas on the bottom chart, you get an alternation. Green, red, red, green, red. That's a divergence. As long as they're not moving in a mirror-like sequence, red, green, 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 that's a divergence. And it's that simple concept of convergence and divergence. As you see with the label charts now, it is that simple concept. If you can understand that and see that, that simple concept of divergence tells you that the markets, despite popular and conventional and literal opinion, the markets are not always efficient. The markets are not always right. There's going to be divergences. And the secret to trading, the essence of trading, is to capitalize on price movements. Simple as that. Now, what we just did right here, convergence, divergence, convergence, divergence. We just exercised your pattern recognition skill set. If you can identify and spot and quantify the difference between one chart or one set of data and another chart, another set of data, if you can quantify the difference, then you have the aptitude to evolve as a trader, That's all it takes. The ability to spot convergence and divergence. Because trading is simply the act of trying to capture profits from price movement. And I can't even tell you how many strategies stem solely from the concept of correlation, convergence, and divergence. That is a key concept that's out there. And strategies are built around that concept. And what we just went through right now was an example of the lateral approach that I had mentioned. to work our way with the mechanics, the rationale behind the move, the essence of up versus down when they normally go up, up, or down, down. Okay, that's the lateral approach that I mentioned earlier. See, the lateral approach makes you think. The lateral approach feeds the natural inclination to attain knowledge. See, evolution, as I mentioned, the 4 stages of evolution, when you work your way through those stages, evolution changes your perception, changes your approach, and your thresholds rise. Whether threshold for pain, threshold relating to share allocation, threshold relating to capital, they all rise. And when evolution takes over, naturally, it makes something like this feel like this. And that's when you know that you are truly evolving. You're growing. You're getting better. And that's what this course is designed to do, to cultivate your evolution. Now, on your part, I hope I made it very clear. Don't rush the process. Let it cultivate naturally, organically. Don't fall victim to conventional, literal thinking. Don't rush to get straight to the seasoning process. Remember, acclimation, conditioning. The first 2 stages are the most important stages. And when you nurture those stages, that's when evolution branches out and it opens up in other facets of your life, in other elements of life, of your trading. Evolution is natural, but it has to be nurtured in the beginning. Just like a baby has to be nurtured in the beginning. And once that inertia takes over, okay, it's set in motion. And that's when you get to the seasoning and the specialization process. So I hope I made a very clear point that evolution is what we want to foster and harness through this 4-level training course. And what we need from you, once again, we know you're hungry and we know you have desire. But I've heard that more times than I care to mention. That desire has to be channeled into effort. Deeds, not words. We're going to go over all the vital aspects of trading the markets. Your commitment to follow through the routines. And as much as you want to say, I'm going to make it, I want to be a success, blah, 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 you want to vocalize your desire? Don't. Show your desire and commitment, okay, through action. And most importantly, work at your own pace. If it doesn't sink in, just go back and play it over again. If it still doesn't sink in, you can go to the next chapter, because I believe in osmosis. Sometimes, rather than focus on one element, continue to focus on more elements. And something happens so that the other elements actually make the element you're stuck on, or the concept you're stuck on, get metabolized in a more efficient way. It's nature. It is what it is. And all we're trying to do here is to cultivate your evolution. So, when you're ready to embark on that acclimation process, we'll go forward with the next video. And I welcome you once again to the Alpha 7 Trading Academy. Welcome to your evolution.